This is Tom Asprey with the Viper Report, the market wrap video for the week ending September 13th. This chart is of the consumer sentiment. It was released on Friday, the mid-month reading up to 69. This chart hasn't been updated quite yet, but shows a strong uptrend from the lows. As we said way back in the summer of 22, we thought that, this had bottomed out. This is obviously very supportive for the economy. The numbers, CPI, etc., inflation numbers, as well as the economic numbers, continue to get better. Crude oil is dropping sharply, and I think that's going to cause a big change in how the consumers feel about the economy and the stock market leading into the election. That I think at this stage after likely favors Harris. People do not like uncertainty, and the economic numbers do suggest a stronger economy heading into the end of the year and probably early 2025. My crystal ball doesn't go much further than that at this point. I just returned from a couple of week break on a cruise to Europe, and great to get away from the markets and healthy for your trading mentality, as I teach my students. Interestingly enough, the S&P here closed at 5626, and when I left, the market was at 5634. Not much of a change overall, though we did have quite a correction here, as we'll talk about. But in my view, the reversal on Wednesday to the upside, as we dropped down below the prior 2-day lows, then closed strong, likely marked the end of the correction. I know the seasonality is horrible, but the bearish sentiment is quite high. Number of articles about, whether you're going to see a mild drop or a crash. I think more likely, based on the market internals, we're going to see a breakout of this range. So let's look at the charts. On a regular basis, we talk about the fact that the 20-period exponential moving average, particularly on a weekly basis, can act as very good support. So I think it was quite positive. We dropped down to test it last week and then closed strong with the SPY up 4% for the week. And of course, the AD numbers, which we've been focusing on for quite some time since its breakout in early 24, they continue to point higher. Some of the momentum indicators, etc., do show some divergences, but this shows that there are more people buying stocks than they're selling. AD line weekly closed at a new high last week. Stocks only shows a bullish trend, not yet new highs, but the NYSE all, that's all the stocks on the New York Composite, made a clear new high last week. So that's leading prices. Regular viewers recall that back in the summer of 23, the S&P AD line made a new high here in the summer. That projected a new high in the S&P, and so new highs are definitely likely in the weeks ahead. Still could see sharp 1 to 2 day pullbacks at any point. The daily chart shows the prior highs here, the resistance at the old highs, and once again the daily AD lines. They broke out, in early August. We had this pullback down to the pivot, closed sharply below it, then sharply back above it. That's a positive sign. Volume did increase. We'd like to continue to see expanding volume. The daily NYSE all only AD, has not quite made a new high, but the all AD line looks quite strong. Though most have given up on growth, this chart looks pretty strong. We had that sharp pullback down to 420 here, below the Stark band, and the AD line held up very well on that pullback. Just dropped back to the breakout level here. It also closed at a new high last week, so that suggests that we will make a new high in the Qs with the R2 on a yearly basis at 513.20. Relative performance, has turned sharply up. We need to really see it get back above its moving average to indicate that the Qs can lead the S&P. For right now, they both look strong. which is going to be stronger. On a short-term basis, I think the Qs. Longer term, not as clear. Though I wasn't watching the market on a regular basis and probably looked, as opposed to 60, 70 charts a day, I was lucky if I probably did 8 or 10 a day, and some days never. However, I did see the reversal to the upside with the close on the 11th. You can see in this chart, and a special update was sent out to subscribers where we recommended aggressive traders buy both the Qs and the S&P. I had to get up real early that morning, and you can see these are the charts we gave to our clients. But also, having coffee downstairs, I had 6 Spanish civil police working around me as I was writing my report. So that's what this picture reflects. It was sort of humorous since they were kind of looking at me, and it was, 5 to quarter to 6 in the morning having their morning coffee. Prior to our departure, we noticed that the VIX and the VXN, the volatility indexes for the NASDAQ 100 and the S&P, had started to turn higher, suggesting a correction, which began right here on the 3rd of September with a vengeance. We had anytime you see this sort of bar here, when the VIX is rising, the AD lines are falling, you see the strong close on the 30th of August was cautionary. It was not a new buy signal. We dropped pretty quickly, got right back down to that 5,400 level, a little bit below it, and then last week we got a low here of 5,406, on the 11th, and I think those lows are likely to hold. So the VIX dropped back below its moving average, so it's declining. I'd like to see it drop back below these lows here to confirm a much stronger rally. If we don't, we could always see a pullback into the moving averages, roughly around, for the S&P, 55.37. On a short-term basis, you can see the advanced minus decline oscillator closed at, plus 1,000. So, it's that could mean a pullback early in the week. Nobody really trusts this rally, and the bullish sentiment last week dropped down to 36. It had been up over 50, so that's looks like it's probably going to turn higher, I would think, in next week's survey. High-low numbers are looking pretty positive. You can see nice pickup, to 359 and the NYSE, above these highs. New lows are dropping off. That's what you want to see. But you need to see that continue. For the NASDAQ 100, not as strong. So we're looking for a move above, this 310, 313 area, and that would be quite strong. Small caps had a nice rebound last week. You see this IJR, got as low as 107.53. You can see the horizontal support here right around 108 down to 105 and closed back above its pivot. So that's an encouraging sign. Have no current position here, but I'm watching to see if we can see an entry that will protect us in case we get another drop. The growth value analysis is a little more friendly towards growth after last week's action. You can see we turned back up here, still below the moving average. MACDs are still negative, so pretty much you need to get above this peak here to suggest that that was just a pullback. You look at the longer term chart, not that. There we go. You can see that right now the ratio is higher, for the month. Any of you have not seen my prior videos, so this is the .com high, so growth peaked. It was a value rally all the way into 2007. You can see we crossed back above here right as the market was topping out in terms of the S&P and the Qs, but from then on it's been a growth rally. We had a twin top here that we broke out above recently, so moving average is still rising here. So we close higher again this week. Looks like growth can still be an outperformer. Thanks to my colleague Jerry and Josie, who he's been working with to explain the markets, I got my regular copy of the Tom and Jerry's watch list while I was traveling. Found out they gave me very valuable information to keep me on the right side of the market. So this is the reports that were sent out today earlier to subscribers. Market gauge 73.8% bullish, so that's strong. Growth gauge is 50, so only 50% have weekly positive signals, DTS, but 90% are above their moving average. You can see IWF, XLK, and VGT all growth, similar to IGT is very similar to XLK except broader, and FDN all gave weekly buy signals. Cloud gave a daily, so that's looking pretty strong. 90% have daily DTS, so we'll be looking for some other weekly. Value gauge is not looking too bad, so 63.6%, slightly more weekly positive signals, and 72% above. So we may see a rally where growth outperforms, but not as much as it has during other periods. Clearly, the short ETF, the negative ETFs, are pretty much all negative. QQQ and QID have yet to generate weekly sell signals, but that probably is going to happen this week. Long ETFs, all above their pivots, all daily DTS, but not weekly yet either. On today's summary of the ETF report, you can see that the SPXL, that's the triple leveraged S&P, gave a nice positive signal on Thursday, continues to move higher, getting up into resistance here, so it certainly could see a pullback from that level. The 20 period EMA you can't really see here, but has turned higher, and the relative performance and volume are also positive. I've been starting to track the changes in the percentage, the 3-day positive DTS signals, to see how they can help me gauge the market. Some very interesting stuff. I'll be writing more about this later, and we'll fill you in. But just for example, you can notice that in July, XLE dropped from 66.7 to 25. And of course, XLE was trading about, at 94. Now, it's down, about 80. Similarly, XLI, shot a sharp increase last week. It looks quite good. XLY in earlier August, it held the 50 level, seems to be important, and surged up to 75, so it's also quite positive. You can see XLC is the only one last week that really saw much of a drop, so it's back to 50. So, the way the 50 level works, it's probably going to be higher next week. Back here, you can see this was quite interesting. In early July, XLU went from 25 to 91, and of course it's been 100 ever since because the utilities have been screaming. Same for XLRE, that's the REITs. Viper Hot Stocks have a couple of nice REITs that are doing well. Went from 58 to 91. So I'll be talking more about these in future articles, and you can see on the scan here, in terms of as of Friday, only XLB gave a new daily buy. SPY gave a new weekly buy. So no new weekly buy yet in the Qs, but some interesting things happen. In terms of the futures, you can see we had this sharp drop down to, on the inflation data, 54.12 in the futures, and then it closed that hour at 55.13. Pretty good move, almost a 100-point rally here, and of course that flipped the 260-minute to positive. For next week, the pivot here is at 4. That's good support. I wouldn't really expect to get much below 55.90 on a pullback early in the week, and then I think we're probably going to be higher in the week ahead. Though half of me is still in Spain, I hope to write a contribution to Forbes tomorrow, and we'll be posting additional articles on the Viper report if you want information on our analysis, and obviously our services, Viper report and hot stocks. We have some openings for training. That's a one-on-one training that I have a number of very satisfied clients who've been making a fair amount of money over the past couple of years because I'm often on the other side of what analysts are saying. Hope you have a good week, and I will be updating you next week. Thank you.